I think what really draws people into Forex trading is the Forex lifestyle itself. You know, just the ability to make money from your phone, the ability to replace somebody's salary from your home. It's really such an amazing thing to do. And I know this from personal experience because I used to drive people around for a living. I mean, it's raining outside and it just took me back really because I remember how much I used to hate the rainy days. You know, it's raining, I have to close the windows, I got people in the car, everybody's breathing, there's, you know, steam everywhere and my aircon wasn't working, you know. So I used to hate those, and now I really appreciate trading because I just took a trade today that lasted for about 30 minutes, and in a space of 30 minutes I made 3 times what I would normally make during my driving days, right? When I used to drive people around for a living, I will drive the whole day. Now, of course, back in the day, I wasn't making much. Now, I say back in the day, but really it's just 8 months ago. So bear with me, it's still new. Back in the day, when I used to drive people around, I wasn't making that much money, right? So 3 times that might not be impressive for somebody who's living in a first world country. But I live in South Africa, and that's quite a step up for somebody like me. So if you've been losing money trading Forex, or you just looking for ways to make money really online, just make sure to watch this video, man, because I'm going to give you 2 simple trading styles that you can implement from today to start making anything from $50 to $100 a day. Just make sure to give me a like and subscribe to my channel, man. I really want to get this channel to 1,000 subscribers, so please help me, guys. Like the video and subscribe to my channel. Just a quick side note before we move into the charts. I really want to remind you guys that this is not an overnight thing. I've been putting in the work. In fact, I've been trading the Forex market for the past 6 years, but I've only been profitable for over a year now. So I came a long way with it. So just keep that in mind while you guys are watching the video. You really need to take this information and back test it. You need to prove it to yourself that this does really work. You need to make sure that it suits your trading style, it suits your personality and all those things, because trading is all about you, right? In fact, that's one of the best advices that I can give you, is you need to work on yourself, because trading is about you. So if you're a sloppy person, if you wake up late and you are lazy and you never exercise, it's really going to reflect on your charts and you're not going to make any money. One thing that has been working really well for me in working on myself is listening to audiobooks. If you don't know what audiobooks are, it's a book really, but instead of reading a book, you're just listening to a book. And in the link in the description, I'm going to leave a free 30 days trial. You can listen to as many audiobooks as you want. You can download even up to 3 audiobooks into your devices. And of course, if you don't like the service, you can cancel after 30 days. But what I really like about audiobooks, it saves a lot of time. I can listen to audiobooks while I'm back testing, or while I'm cooking or cleaning or exercising. You know, I'm always listening to some positive things, because I've been surprising myself lately of how much I get done in a day without even complaining about it. And I thought to myself, it's all the audiobooks I've been listening to, all the positive vibes that I've been installing in my mind, because I'm always into some positive shit, man. I'm always listening to some hustle things, some grind, just yeah. So I'm a student of Andrew Tate, right? The top G, aka Trigadon, Yoga Fire Dalsim, right? And while we're on that subject, please let's fight for the top G, man. Let's fight for the Tate brothers, especially if you are a man. I don't want to say much, but you know what I mean. Come on, man. Free the top G. But anyway, one of the things that Andrew Tate preaches is that any business that you're going to start, the number one question that you need to ask yourself is, how am I going to make money? How is this business going to make me money? And Forex is not different, right? When you approach Forex, you should approach it in a businessman kind of mentality. How am I going to make money? Well, the simplest way I can explain this to you is, in Forex, we can only make money in 2 different ways. Either you are buying the market or you are selling the market. Those are the only 2 ways you can make money in the market. You can't make money otherwise, right? So if you understand that concept, as an intelligent person, you're going to stop and say, whoa. So then how do I know when to buy and when to sell? And that question, traders, is like solving Forex. It's what every Forex trader in the world is trying to answer. When am I gonna buy and when am I gonna sell? It's such a simple question, but it really classifies traders in a lot of different categories, because then you find people who are trying to solve this question by using indicators. Some are using algorithms. Some are trying to solve it using price action. And even in price action, you find people who are using support and resistance. You find supply and demand traders. You find Elliott waves. And you know what? It's just a lot of systems and algorithms that people are using just to solve this problem. When do I buy and when do I sell? And I feel like that's one of the most beautiful things in Forex, right? Because when you're trading Forex, you don't have to convince anybody. You don't have to see customers or deal with people or have a boss or subordinates or anything like that. It's just you and the charts. And the big question remains, when are you going to buy and when are you going to sell, right? So if you are a price action trader like me, I'm going to break it down for you. Since we know that we can only make money by buying or selling, we need to find out how we're going to know when to sell and when to buy, right? Let's take an example at the buy trade here. In my opinion, there's only two types of traders in the world. And this is very important. If you can really understand this, even if you don't know anything about trading, just listen to me carefully. You don't have to pay thousands and thousands to learn trading. Just watch this video. By the end of the video, you will know how to trade Forex today. And then from there, it's up to you. Are you going to take this information and use it? Or are you going to go,
that was entertaining. That South African boy is really smart.
But anyway, we've got trend traders. Let's change that to green. We've got trend traders and we've got key level traders. Let's just change that to, yeah, we can all see that, right? Okay, so let's start with the trend traders. The general idea of trading is that in an uptrend, for a market to be considered an uptrend is the market that's going to the upside. And when the market is going to the upside, we are buying because we are looking to profit from this push to the upside, right? So how do we identify an uptrend? An uptrend is going to push and exhaust, creating a higher low. And it's a higher low because it's a low, but it's higher than this low, which is the previous low, right? So it's going to push, exhaust, giving us a higher low, push again, breaking the previous high, creating a new high, and retesting again, giving us higher low. This is a new higher low, right? Now, as trend traders, if we're going to be buying the market, we're only living for this moment here. If you're going to be a trend trader and you want to buy the market, you don't just buy the market anywhere, right? You need to wait for the market to break the previous structure. This is to validate the uptrend, because an uptrend remains an uptrend as long as we keep breaking the previous highs, creating new highs, retesting, and pushing again to the upside. So as long as we keep pushing to the upside and breaking the previous highs, we are on an uptrend, right? So in a situation like that, if the market is pushing to, come on, man. So we live for these moments here. Every time the market push and break the previous highs, we wait for the market to come back and retest so we can then take the trade, anticipating to benefit from this second push to the upside. And it's going to look something like that. Stop loss below structure. And then you target whatever you target. I like to target 1 to 3. Some people like 1 to 2. Some people like 1 to 1. Whatever your edge is, right? I don't recommend 1 to 1, but we'll talk about that more later. But in an uptrend, if you're going to be an uptrend trader, this is where you can execute your buys, these areas here, right? When the market comes back to retest. These are the only places you can execute a buy. You don't take a buy here. You don't take a buy here. You don't take a buy here. You wait for the market to come back and retest the previous structure, giving you a price action that you can trade and then execute to the upside. It's going to be the same thing with the downtrend, really. It remains a downtrend as long as we keep violating the previous structure and we keep coming back to retest it, then breaking the previous structure again. So as trend traders, if we're going to sell the market, we're going to sell the market in these areas here, right? Wait for the push, exhaustion, execute to benefit from this move. So this move is going to break the previous low, creating a new lower low, and then we wait for the retest to execute here to then benefit from this move here. And then you go for a 122, 123, 124, 125, or whatever your edge is in the market, right? So these are the two ways you can take trades as a trend trader. Well, it's not really two ways, actually. It's really the same thing, it's just the other way around. So in an uptrend, if the market is pushing to the upside, you wait for the market to come back and retest, execute here to then benefit from this move. Same thing with the downtrend. If the market is pushing to the downside, violating previous structure, you wait for the retest, execute here to then benefit from this move to the downside. Now this is a trend trader. Let's go to the second type of a trader, which is a key level trader. Where's our key level trader? Right here. The second type of traders are key level traders. Now key level traders are really interesting because there is a lot of ways to approach key level trading. As a key level trader, you can either buy the bottoms and sell the highs. Just keep on playing it like that. And what you are doing is you are selling the highs to benefit from this move to the downside, right? And you're buying the bottoms to benefit from this move to the upside. So you're just going to keep on buying and selling the market until it breaks out of this zone here. That's if you are this type of a trader. The second key level trader is a breakout trader. So this type of a trader waits for consolidation to end. So while the market is still in consolidation, you don't do anything, unlike this first trader here. So you don't buy the bottoms and sell the highs. You wait for the market to break to the upside. So this type of a trader lives for this moment here. You're only observing for this moment here. I don't like taking these ones either, because then you get a situation where the market will peak to the upside and then break back inside the zone. But of course, if you have back tested this and this is the only setup you trade, after 100 trades, it should be giving you around 60 to 70% of the profits, because that's the thing in trading, right? You just need to pick your struggle and stick to it. You don't have to jump from one strategy to another. You just need to find your edge in the market and just keep on executing the exact same way, day in, day out. But anyway, that was a breakout trader. The last type of a key level trader is a break and retest, and this is my favorite one, to be honest with you. This is the safest way to trade the key levels, because then after the breakout, we wait for a retest and execute here. Now this is a good trade for two reasons. Firstly, the stop loss is really small, which means I'm risking way less, but I'm gaining much more. You can target, with this type of trades, you can target something crazy like 1 to 5 or 1 to 7 or something crazy like that. But I like being realistic. I keep it to 1 to 3, because 1 to 3 just gives me that sweet spot, because I only need to be right 30% of the time and I'm profitable. Think about that. This means I can lose 70% of my trades and win 30% of my trades, and I'm still making profit. That is the power of 1 to 3s. So 1 to 3s are really more possible with this break and retest, because if you're going to take a 1 to 3 on the breakout, the market still needs to come back and retest, and it's going to stop you out, because one way or the other, after a consolidation, when the market breaks to the upside, 90% of the time the market will always come back to retest before pushing to the upside. So these are the safest trades you can take as a key level trader. After a consolidation, wait for the market to break. Once the breakout happens, you anticipate a retest. Now it's possible for the market to break and continue going to the upside like that, right, and not coming back to retest. That's fine. There's no need to cry about it. You just move on to the next trade, right? You move on to the next pair and continue hunting for more trades. But to be honest with you, this is my favorite way to trade when I'm trading this break and retest. This is a sell example, and breakout trader is just a breakout to the downside, since that one was a buy example, and break and retest, same thing, is just an example to the downside. Wait for the market to break to the downside, wait for the retest, and execute at that level right there. These are the only two type of traders you can be. So you need to pick which type of a trader are you, and you need to stick to it. Are you going to be a trend trader, or are you going to be a key level trader? And if you're a key level trader, which trades are you going to be taking? Are you going to be buying the support and selling the resistance, or are you going to be buying the breakouts, or are you going to be waiting for the breakout and trading the retest? This is completely up to you guys. You're the one who needs to backtest this and make sure that it works for you, so that you can have the confidence when you walk into the markets, because it's a different story when you walk into the market with a strategy that you backtested yourself. You know, it gives you that confidence because you know that this is my machine gun. I trust this machine gun. I've seen it shoot before 100 times. You know, it's such a powerful thing. Now we're going to move over to the charts here so we can see some of these examples in real time, right? Let's move to the downside. I hope you really understand these concepts, because these are the backbone of trading. You need to make your decision now before you can start trading. Which type of a trader are you going to be? Are you going to be a key level trader, or are you going to be a trend trader? If you're a trend trader, then you wait for the market to come back and retest after a break of the previous structure. And the reason we wait for the break of the previous structure is to validate that we are still on an uptrend. Same thing with the downtrend. The market will violate the previous structure and then coming back to retest, and this is when we strike on ourselves. So you need to decide, are you going to be a trend trader, or you're going to be a key level trader? If you're going to be a key level trader, I really suggest that you become a break and retest trader. These are really accurate. So now let's go over to the charts here. So we're just going to go over a few examples here on the charts so that you guys can see live examples of the things that we're going through. Right, so let's just go to EURUSD. I really like EURUSD and GBP/USD, man. They really move nicely, and they give me more opportunities to trade on a daily basis. If you look here, we're looking at the EURUSD chart. It's a 5-minute chart, and I really like a 5-minute chart because it just provides me with a lot of opportunities to trade in a day, because I'm a day trader, right? I take my trades every day. I go into the market every day. I go hunting every day, and I need to come back with my meat every day. So 5 minutes just provide me, man, with so many opportunities in the market, because like I always say in my videos, nobody knows what the market is going to do. The most important thing to do is to find an edge in the market and just continue executing that day in, day out. So if I'm taking 5-6 trades a day, at the end of the day, out of 6 trades, I might lose 3 and win 3. If my risk management is proper, I'm making money, you know what I'm saying? As opposed to me taking 2 trades a week. What if I lose both trades? That means the entire week I would have made a loss. Whereas me, I get into the market and execute 5, 6, 7 trades a day, you know, for the whole week, day in, day out. And at the end of the week, when I review my trades, I'm always on the upside, because now I have more trades that gives me an edge on the market. right? So let's look at these examples. We're just going to start scrolling from where we are really, because these examples happen day in, day out, especially if you're trading a 5-minute chart. They happen all the time, and you're going to see these things all the time. So looking at this, I can see our first example here. Bear in mind, if you're still new to trading, obviously it's gonna be a bit harder for you to see these setups, right? But as you continue doing it, just like anything in life really, as you continue focusing on it, you're really gonna grow in it. But let's look at this. We can see from a glance here that the market was coming from the upside, shooting to the downside, right? And all of a sudden we couldn't push down anymore. We got stuck in a range there, just kind of bouncing between this range here. And then for the first time we broke to the downside. Once we break, we just wait for a retest. And if you look there, we got a retest there. And if you still remember our setups, for every breakout there must be a retest, and this is what we live for. So if you're a key level trader, if you're a breakout key level trader, this looks exactly like what we just went through, right? Market stuck in consolidation, wait for the break and the retest, execute here to then benefit from this move to the downside. Stop loss above structure, and then you can target your 127, 128, 125, but I like to keep it realistic and keep it to 123. You know, 123 just gives me the best possible edge really, because I already explained, right, that if I'm taking 123s, I just need to be right 30% of the time. So that's the first example. Let's just keep on scrolling back. That would be an example of a breakout trader. Let's see what other example can we find here. Oh, the market just keeps on shooting to the downside, baby. Let's look at this one here. Let's look at this one here. And this happen, you don't have to scroll back for a very long time, because these traders happen all the time. If you are taking a break and retest setup and you're trading a 5-minute chart, say you're trading about what, 5 pairs, 3 pairs maybe, you can get 2, 3, 4 trades a day. 4 trades a day, man. You just need to let your odds play out. If you're taking 4 trades a day and you're taking a break and retest, that's such a powerful pattern. A break and retest happens all the time, and if you're trading 5 minutes, you're going to find those all the time. So if you notice here, we're not going to keep scrolling back a lot, right, to find these patterns, because they happen. We just found one here, and here's another one here. And this will be in a space of what? This is a 5 minute. This will be in a space of a day. You have 2 setups on one pair, right? We haven't checked GU. We haven't checked Australian dollar, USD. We haven't checked New Zealand. You get what I mean, though? But anyway, let's just look at this. We see that the market has been pushing to the upside, and all of a sudden we couldn't break to the upside anymore. Let's just zoom out so that you guys see what I'm talking about. The market came from that downside, right? We were pushing heavily to the upside, but all of a sudden we got stuck there. We couldn't push to the upside. And if you guys remember, an uptrend should push, exhaust, push, exhaust, push, exhaust, and so on and so forth. But in this case, we can't push up anymore. The market start doing things like that now. We can't push to the upside. If you see that's what's happening there. So the market couldn't push to the upside anymore. If we drag this thing to the downside, we can see that, okay, so the market got stuck there a bit, right, before it broke to the downside. So how do we identify a downtrend? By a push, exhaust, creating a higher low, push, breaking the previous low, exhaust, pushing, breaking the previous low. So this is how we identify a downtrend, right? It needs to keep on breaking the previous low, and then we wait for a retest to execute on these levels here. So let's look at what happened here. Push, exhaust, push, breaking the previous low, right? Retest. This is what we live for, right? So we identified that, okay, this is a downtrend because it has pushed, exhaust, and it's violating the previous structure. Now it's here to retest the previous structure. Just the same thing that we're looking at right now, right? So it's something like that, and we live for these moments here. So we're going to wait for something like that, execute here, take a sell, and wait for the market. Go for your 1 2 3, 1 2 2, or however you trade the market, right? Let's see if it did hit our take profit. Oh, we'll be sitting on this one a long time, baby. Okay, it did hit our take profit eventually. What, 1 2 2, 1 2 3. Okay, whatever your risk to reward is, right? The most important thing is that we hit take profit and we continue scrolling back. So now we have one break and retest trade, and we have one trend trade here. Let's just keep scrolling to the back and see if we can spot another trade here. And these guys happen all the time. Like I said, let's look at this. Is the break and retest to the upside. If you haven't seen it, you will see it just now. But what happens is the market was stuck in a consolidation there, busy push, not breaking to the downside or to the upside, right? Just kind of stuck between those zones there. For the first time, we saw the market breaking to the upside, and as you know, once that happens, what we do is we wait for the market to retest, take a trade, execute a trade, and to benefit from this move to the upside. Stop loss below structure, go for a 1 2 2, 1 2 3, or however you want to trade it, right? Just exactly like that, right? Boom, take profits. So that's just a break and retest to the upside. I'm sure you get the gist though, but these patterns, guys, repeat themselves over and over and over and over again. Once you see that the market is stuck in consolidation, and again, I really like these break and retests, man, because they really happen more often than not, more often than you think, right? Especially on 5 minutes, they really happen more often, right? If you take a look there, just zoom in, right? The market was stuck in that consolidation again, and once you see this, you just sit on your hands, right, and just wait to see, is it going to break to the upside or it's going to break to the downside. Once you see that, you're like, oh, so it broke to the downside, okay, and then you wait for the retest. Okay, so there's a retest, take your trade, shoot to the downside, stop loss above structure, go for a 1 2 2, 1 2 3. Let's see if that really did happen. 1 2 3. Did we hit our take profit? Yeah, we hit our take profit before we went up. So here's your 1 2 3 there. If you missed that one, or sometimes the market will come back to retest, right? It will come back to retest, push to the downside, come back again to give you a double top. A double top is even better signal than just a break and retest. So once you see a double top, you can execute again to benefit from the move to the downside. I'll probably make another video talking about patterns and candles as a whole, because I'm not sure how many of you guys can read a candlestick, right? But these candlesticks play a huge role, right? Because when the market comes back here, you need to look for certain candles before you can sell or before you can buy, right? But in this case here, this is a double top. It's a really powerful pattern to, you know, just benefit from the market, man. You can just take this to the downside. This is still a break and retest, by the way, right? Just that it came back to retest twice as a double top, and you know, the really powerful signals. But a double top is something like this. Boom, boom, and the market shift to the downside. So these two areas here, we call that a double top. Why do we call that a double top? Well, because it came back to the top twice, double, just like that. So these ones are really powerful, or the double bottoms. And again, if you haven't watched my previous video where I talk about these patterns, I'm going to link it here. It's such a banger, guys. It will really help you a lot. So I'm just going to link the video in the description. Once you're done with this video, just make sure you watch that video. It was such a banger. A lot of people liked it, so I'm pretty sure you're gonna like it as well. But yeah, double bottoms, double top. Just don't get lost here, guys. What I'm talking about is still a break and retest. It's just that on the retest we get a double top, something like that. You see that? That's what we got there. We got a double top. After that, break and retest. You see what I mean there? So double tops are really powerful patterns. Double bottoms is just the same thing. It's just that it's on a buy. So let's say this market had broken to the upside, boom, come back to retest. We take a trade here, but the market decides to come back and retest. So if you're already on a trade, if it doesn't take you, if the market doesn't kick you out, you can go ahead and enter another trade. Yeah, almost guaranteed you're gonna hit take profit. So if the market does that, more often than not, it's really giving you a nice opportunity to double down on your position to then benefit to that trade. But yeah, that is another example of a break and retest. So far we've done the trend trader and the break and retest, guys. I'm sure you really get the point of what I'm trying to say here, but if you don't understand, just make sure you watch this video again, guys. And if this video was really helpful to you guys, make sure you give me a like, man. Subscribe to my channel because I drop gems like this on a weekly basis. I'm gonna make a video giving you guys a full strategy. It's actually a strategy that I'm using for gold. A strategy that I'm currently using. It's really helping me to scale my account really fast. Just make sure you have been trading for a bit while, or you can tolerate risk, or you just have enough money that you can afford to lose, because gold really moves. If you know gold, it's really heavy, right? It's unlike currencies. But stay in tuned for that strategy. I'm going to give you a full strategy that you can start backtesting and start implementing it on the markets from today. I've backtested this strategy almost 1,000 times. I'm really sure it works. But these are the principles of the market, guys. If you are still lost on that, just leave your comments on the comment box, man. Maybe I can explain it better. But this is all it takes for you to be profitable. You just need to make a decision. Are you a key level trader or are you a trend trader? And as I've said, if you're a key level trader, just make sure you always wait for a break, retest, take a trade here at the retest to benefit from that move to the downside. Same thing on upside, wait for the break, retest, execute to benefit from this move to the upside. Or you are a trend trader. This means you're just gonna identify first that the market is pushing to the upside or to the downside. Basically, you need to identify the trend first. And how do you identify the trend? We have a push, retest. So let's say this is the market that's going to the upside. It's gonna push, retest, creating a higher low, push again, violating the previous structure. This is really important. As long as the market keeps violating the previous structure, then we are still on an uptrend. So you need to identify a trend first. You need to identify that, okay, so this market pushed, exhaust, pushed again, violated the previous highs, made a new higher high, and now it's back to retest. Once you see this, you can identify this as a trend, because this is where you can execute, because now you anticipate the market to repeat that same move to the upside. We're anticipating the market to push to the upside, so we can benefit from that move. And it's the same thing for the downtrend. Really, you need to identify that the market is on a downtrend first before you can make any decisions. And how do you identify that? By seeing that the market is breaking the previous lows, creating new lower lows, and retesting the previous lows. And this is where you execute. You wait for the market to come back and retest, execute, benefit from the move to the downside. I hope that really makes sense. But otherwise, man, this is the core of trading. Really, if you understand this, you can trade any market.